It looks like it's going to be a sell on the CAD yen, a sell-off here. Some interesting price action. We're heading to the downside. It looks like a similar thing on the euro yen. So strength in the yen and weakness in the pairs associated with the yen. And that is the focus for this week. All right, guys, so what's happening? It is a new year's 2024. Welcome back to another video. As always, going to start breaking down the charts. This is the first week of the year that we're doing this, just into January. Let's get into what we've got happening this week. Bear in mind that because it's a new year, we've got new candles, yearly candles. We have to reassess what the market is doing. We'll have a assessment of what's going, analyze the bigger time frames, and then look at that from that perspective and look at the charts from there. So we've got our news for this week. Here's the calendar as always. Really helpful to know what's happening this week. I've got the pairs shortlisted for this week, so I've just got the dollar as a reference point. Euro dollar is indecisive there. I've marked it CAD yen, looking for the sell scenario. Euro yen as well, looking for the sell scenario. Euro CAD, looking at a possible buy, which is opposite to what euro is on the euro yen, but we'll look at that in a minute. Aussie New Zealand, looking to buy that as well. Gold, looking to sell, and oil, which is crude oil, US oil, looking to sell that too. That is the list. Let's now look at the charts in a bit more detail. Have a look at what's going on. All right, let's just move that. Okay, first of all, going to assess the overall picture, or we start with the Dixie, the dollar index. And for this week, let's just have a quick look at the calendar first of all, just before we get to the charts. We've got Monday, Swiss news, CPI, although it's a monthly figure. A bit of yen. We have Swiss currency reserves on Tuesday. That will be more significant. We've got Aussie CPI numbers. We've got the main news on the pound, from the pound there, the central bank speech. And then on Thursday, CPI news. So CPI is a major one on the dollar. And we've got that on the Thursday, so looking out for that. And then again, pound and dollar once again on Friday. So mainly dollar and pound, and then we've got a bit of Swiss. Let's look at what else we've got. So see if that lines up with any technicals on the charts that we've got for this week, although we don't have any pound pairs on the short list. So looking at the yearly, here we are on the dollar. And as you can see, we have had a spike here above 2 years ago. We've got an inside bar on 2023, and then this indecisiveness this year because we have no clear direction. It would hint at a buy, but so far not quite clear. 6 month, we have this spike to the high. We've got the previous candle ending bearish. Let's have a look at the 3 month, and the 3 month has been bearish the last 3 months. So that was the tail end of last year. So we've got bullishness, but we also have bearishness. We have the spike on the higher time frame, looking on the, let's have a look on the 1 month chart, and then we've got this move down. So is it bullish? Is it bearish? It's not quite clear yet. Here's the weekly chart. The weekly chart is bearish, but we don't quite know, or not quite certain, until we have a full break of this low. So let me just move these away, because we no longer going to look at them. And what we can see is quite uncertainty. Now, the way to look at this is to just anticipate possible moves and see where do we go from there. So if we invalidate this major swing low, which you can see on the monthly, then below here would be a sell. So look on the weekly again, and then if we go above here, then we look at a possible buy. Now, for now, we don't have any clarity. Here's the daily picture, and as you can see, if we head down into the downside, then we would go lower below this low. Below here would be downside, would be the sell idea. However, above here would be the buy idea. Now, so far we're in this downtrend, as you can see on the daily, and we do have, let's just get our zone, bit of a zone here. So we may look to do this. Now, this is the first possible scenario. If you want to take a fib, you can do that. So here we've reached the 61.8 level. Let's see if we have a breakdown and continue to the downside. If we go above a significant high point up here, then we'll have to reassess because we may be ending up in a bullish scenario or a range. So early, still early on in the year, very early, is just not really worth the risk because we don't know what's going to happen. As you can see, this is a kind of a range, and then now we are inside this bigger range. It's quite confusing. So no clarity on the dollar, which means if we go into dollar index, euro. If we go into the euro dollar, what we can see is, let's just get clear of all of these. These are previous markings that we have this uptrend. If we look on the monthly, we're in a range, and now it's not quite clear where we are or where we're going because, well, we've moved up, now we've broken down, and are we going to go lower? So if obviously dollar index goes higher, euro dollar to go lower. Let's see if we've got any levels to look at. We have a bit of a level here. And then the two major levels to bear in mind is this low and this high. So above would be a buy, below here would be a sell, and the first scenario, possible scenario, would be something like this. Doesn't mean it's going to happen. It's going to have to line up with the dollar index, and the safer scenario would be to wait for these two levels. So we've got this level here that we've breached. We've now gone lower, and it seems that we may go lower still. So at the moment that's the bias, but it's not very clear yet. We also have the 1.1 level here. So I'm just kind of assessing the picture and what's really going on at the start of this year. And as you can see, not very clear. We've got several reference points, but this being the daily chart, this may take some time and may not be relevant. What can happen, or well, the opportunity can be, is on a lower time frame. So making use of some smaller opportunities here, but we're not going to go into that in this video. A bit of uncertain scenario. Let's go to the next one then, CAD yen. Now, CAD yen will be a more interesting one, as you've guessed. So here we have a major level here at the high, which we've reached on the CAD yen. If we go down in time frames to get more clarity, here we've reached a level. So we breached that level, we just poked it in here. You can see that. We poked it, we saw this whole thing. Let me just get that clear as a range. Now we've now broken through the range. We've come to the downside. We've hit this high. Here's that high. We've hit it. We have just gone through it on the 111 whole number. And then we've come lower. What does that mean? Well, that means that since we are going lower, let's go to the daily time frame, then we're looking to the downside. As you can see, this is a big move to the downside and a very rangy, slow move to the upside. What do we have? Well, we have a bit of a level here. We also, if trend lines your kind of thing, the kind of trend line, which we just poke through. So we've got several scenarios here. We've got this as the invalidation point if we're going to go lower. So what we'd expect is for the market to do this, not to breach this high. If we breach this high, scenario will be to the upside. And what we'd like to see is a run lower. And we have a target down here, this low. Then we have this obvious low. And we have this obvious low. So here we are. And in fact, you can see that there was kind of a double or triple low over here. And as long as we do not breach this high, then we'll continue to go lower. Let's have a look on the 4-hour time frame in a bit more detail. So here we are. If this is indeed a fake breakout, then what we should see is a break of the structure down here. Eventually. And so basically we're looking for a move down, pullback, and a continuation. So that's what we're looking for the week. As you can see, the weekly candles, the previous weekly candles, even though they're from previous year, they've got all these wicks to the upside. The body, not many wicks to the downside, lots of wicks to the upside. That hints that we are going lower. We've got this weakness here. As you can see, the structure was broken and we closed lower. So the hint here, what the market is showing is that we bounced off this 111 level and then we are going lower. So I'm going to stick to that bias and unless we breach this high. So this high, if we just mark it up here with the dot, here's the reference point, and that is the idea, that is the breakdown on the CAD yen. As you can see. All right. Guys, if you like this video, click on the like button and subscribe if you're just coming to us new. It's your first time on the channel. We break down the charts every week here, and we've also got an update in the middle of the week. This is the bias for the CAD yen. Is what we've got here. Let's have a look on the next one. The next one is Euro yen. Very similar, as you can see. What we can do, first of all, let's clean up last year's markings. No longer need that. So let's look at it fresh and look at what we have on the Euro yen. So Euro yen, once again, last year pushed higher. It looks bullish on the 6-month. We had this pause in the market. We had this very deep retracement. We're in this deep retracement. We had this pause in the market on this 160 level, 162. And then let's look on the lower time frame. We had this pin bar, which signifies a possible reversal on the 3-month. On the 1-month, we had this breakdown. So this looks like now a swing. We broke lower. We broke the low of this month, which was November, broke the low of October. And this month, December, headed lower. So now we're going to look to the next low. So let's go down the time frame to the weekly, and here's that low. So again, very, very strong move to the downside, which indicates, again, we are heading lower. And then we've got these wicks to the upside, another indication we're heading lower. So here's that low, and then the next low after that as possible targets. And we've got a level here that we can look at, which we're just reaching into. So obviously what we'd expect is for the market to do something like this. Let's have a look down now into the daily picture. What do we see on the daily picture? Well, you can again look at a high and a low and look at the 61 level here and above. So then this high should not be broken. So we're going to call this high, last major high, the invalidation point. So that's that. We'll just mark that in. And then what we want to see is a break of structure. And the last structure is this low. So it'll be a possible some kind of reversal up here in this zone at the 61.8, and then we'll have a breakdown. And once we have a breakdown, then the lower time frame idea maybe somewhere down here, something like that. That would be what would be the preferred scenario. Okay, so with that sell idea, we've got that setup, got that expectation or analysis, let's say. Nothing is certain, of course, and we've got our invalidation point. So all is good at the moment. All right, so that's the setup, that's the scenario. We'll see how it plays out if it actually does. For now, let's leave it at that. We've got it marked up. Okay, hopefully that helps you to see how we are looking at the charts piece by piece. So big time frame, big picture, yes, it is very, very bullish. However, we are in a very retracement phase, very highly retraced, and now we have broken down, so which makes it look like we are now briefly at least moving to the downside. So you can see that retracement here off this high. We retraced, we have very deep retracement, did not breach this high, and we had a breakdown here in this month. So that's that on the Euro Yen. Let's move on to the next one, which is Euro CAD. So Euro CAD, again, let me just remove these for now. What do we see? On the yearly, we have this big wick to the downside. We had this move higher, move lower, big wick to the downside, and now we're moving higher. Previous 2 years bullish, so we're looking at a bullish scenario so far. 6 months, again, bullish candle. This was the low that we looked at. As you can see, there's a pin bar here, brief pause, and then looks like we are in this little range. Well, not so little because it's in higher time frame, but little in terms of this price action. Let's look on the 3-month. We had that brief pause to the downside, this brief retracement, and we had this low that was made. Let's look at the monthly, and then the market moved higher. Now, the question now becomes, are we going to go higher from here and not breach this low? And if that is the case, then we're looking at this high as a target, and then the next high after that up here. Of course, the other problem is that this, you could look at this whole thing as a range, which means that if that is the case, we'd really want much lower, cheaper prices before we continue to the upside. And if we draw a fib from the major low to the high, we can see that 61 is right here at the 1.38. What does that mean? Well, that means that if this is not the low, if we breach this low of this range, then this would be the marker. So it'll be definite invalidation as sell from here. Or are we going to hold this low and we're going to go higher? So if that is the case, if we are going to hold this low, what are we looking at? Well, we're looking at this low as a reference point, this high, and the 61.8 falls down here. So let's mark that out. It's also within a bit of a level. So that's the idea. As you can see, no reversal pattern here. We just have wicks to the upside, which hints at the fact that we may go lower still. So the idea would be for this case to go first lower, and then we see where we go from here. If we have this, then some kind of turnaround to continue to the upside. That will be the real preference for this trade, for this setup idea. How would that look like? Well, what we want is actually first move to the downside, give us the cheap price on the 61.8, move higher, and then once we get that move higher, then we look at a possible retracement to then continue. There'll be perhaps some kind of level. Once again, you know how it goes. And then when we get that level, we get a nice strong move higher. We have clear breaks of structure. I mean, I don't know if it's going to happen like this because we still have way more price action to go. But at the moment, this is the significant high. So if we come lower, this will be the next significant high. But for now, we are stuck in this range. So again, tricky price action. This is just scenarios building into the future. It may not happen this week or next week. It may happen even in February. Who knows? The point is that we have to wait for it to pan out. And I don't know, nobody knows whether we are actually going to have the breakdown to the downside and actually on the higher time frame, on the much higher time frame, break down into the cheaper area, which is down here, 1.4, 1.38, as I was saying. And this whole thing could be a big fat range. Yeah. So that's that for Euro CAD. We'll move on to Aussie New Zealand. Aussie New Zealand, looking at the 12-month, 1 year, we've got still bullish candles. Looking on the 6-month, we've got kind of a range. It's uncertain. 3-month, still ranging. 1 month, still in a kind of a range, isn't it? It's all kind of choppy. And then if we look at the 1 week, on the 1 week, we see that within this range, we have this move higher, came down, retraced, gave us these entries that we looked at earlier, some weeks back at the tail end of last year. And now looking on the daily, maybe this is now the continuation. So what does that mean? Well, that means that possibly we have this low, possibly, let's just delete all of this. There's a lot of stuff on the chart, isn't there? I want to be seeing all of that. Got all these highs, it's just messy at this moment. So now we came into this area, we created this low, and now we've moved higher. This low becomes the invalidation point. We have an area here that we'll be interested in. We've broken the structure, and now we're looking at the next possible highs to target. Therefore, what we want is a move higher, retrace to get a better price, and then continue on its way. Let's look on the lower time frame. Here's the 4-hour. So once again, I want to see a nice clean move up. At the moment, we do not have that. It's kind of stuck in this messy type of range. But the invalidation point will be definitely this low, which is the last obvious low. And then we want to move higher. Again, we may have another level somewhere down here. I don't know where it's going to happen, but look for that and then retracement and continue to the upside. And of course, breaking this on its way to the upside, which is the high that we're looking for. So that's that on Aussie New Zealand for the week. Looks decent. Now let's look at gold. Well, gold, interesting one. We have had last year very, very bullish. However, we did not go above these wicks. We did wick through it. We did not close, which is a sign. 6-month as well, wick through it, did not close. It's another sign. 3-month also did not close. As you can see, bullish candle, but did not close. Let's look at the 1 month. 1 month also did not close above these highs. That's a new record high. However, are we having a possible retracement here? Well, what you can see is on this level, on this high, last significant highs up here, we went through it, came down, and then created this big bearish reversal pin bar. Now the question becomes, are we bearish? Let's delete all these markings. Are we bearish? Well, we said that we have some difficulty with the dollar. And if we have a difficulty with the dollar, that means we have difficulty with gold, because gold is priced in dollars. So it's heavily linked to the dollar. Now, what do we see here? Well, are we going higher or are we going lower? What we can do is mark significant areas. So we've got a low here, we've got a high there. Therefore, a break above would be interesting for gold, and a break below would be interesting for a sell on gold. Break below would make this the next target, and a break above would make this the next target. Now, for the moment, it seems that we have a possible reversal because of this big wick and a big pin bar. So I'm still looking at the downside. Let's look on the 4-hour. And as you can see, we've created new lower lows and lower highs. Now you could say that we are kind of stuck in this range, right? This big range. Therefore, we'd really want to go lower. And that is the reference point here. And we've got a bit of a level here as well. So a move lower with a pullback and continuation down would be the preference. However, I don't really want to create any bias or create any certainty, any real high probability until we have something more clear, and we may still be stuck in a range. Remember, the caveat here is we are in January, beginning of the year. Many people on holiday, not that many people active, so liquidity will be low. Bear that in mind, okay, please. Okay, so far we're still bullish. So we've got higher highs, higher lows, you could say, and it's really early to call out a bearish scenario. And that's why I am not at all confident at the moment on gold. These two will be the reference points. Okay, and last but not least, let's go with oil. Again, 12-month, we can see clearly bullish. Last year closed bearish, and we are now in the new year. Now we've got this bearish sign, or brief, at least very brief pullback. Are we still in the pullback of oil? 6 months is certainly showing that we're still in weak candles, week here, and then last 6 months was very weak as well with this big wick to the upside. So bearish candle. I would expect, or I would anticipate, I would say that we have continued bearishness on oil. What do you see here? Well, here's that candle that made the wick. We had the move to the upside and then bang, completely annihilated this whole previous 3 months. Went below the low of that candle, and that hints at the fact that we've got more downside. What else? Well, we can draw a trend line here. And as you can see, we have got, look on the 1 month time frame. Got a bit of a trend line, if you like trend lines, which would hint that we may have a channel happening here on oil. Therefore, the bias will be to the downside, and the downside would be the next lows, 1, 2, and maybe even more than that. I don't know, but that's some time away. Let's have a look at what we have for now on the weekly chart. On the weekly chart, we have this swing here. We've broken lower. Here's the structural break, really big structural break. Now it seems that we may have a brief retracement phase, and the retracement phase, if we're going to confirm it, will be a break lower, coming into a retracement and then moving to the downside. The level would be maybe a down here. I don't know. Let's have a look on the 4-hour time frame. We have a possible high here. Let's see if we get a break. The break will be number 1 on this structure, and then on the next structure after that. So really want to see them broken and then head lower, in which case we may have a smaller structures down here within the bigger time frame. Remember, price is fractal, so within the big time frame we have the smaller ones. So this is what it looks like. Okay, a fractal within a bigger picture, which is this idea that we're holding. If we just mark out some invalidation points, the invalidations will be, let's go to the higher time frame. So we've got this major high sticking out. So this would be an invalidation point, which means if we break this whole downtrend idea is kaput. It is gone. We will now be heading higher. That would be the more likely scenario. But at the moment, again, it's neither here nor there. It's choppy. It's kind of ranging. We moved higher, then we broke lower, then we're stuck here. Not quite clear and not very favorable conditions, I have to say. This may be one for February. Who knows? It's one of those things. We're very early. We don't want to pick at straws here because we want to go with the easy ones, and the easy ones are the yen pairs for this week at least. All right, so here's the dollar. As you can see, we have what looks like a downtrend, but may not be because the higher time frame is not clear. Yeah, that's really it for now, and that's it for this video. A bit more perhaps in depth. We've got more higher time frame candles for this week and this month, and then really we have to base it on that. And because we're basing on higher time frame, we have to consider the fact that we have a higher time frame picture, bigger bigger time frames to work with. So we have to really think with a bigger picture and keep that in mind and not get caught up in the little details because they can throw you off and the market can it just basically throw you off track. That's it. With the dollar pairs, dollar news, keep in mind it will be much clearer after Thursday and Friday. Therefore, the whole week will be gone, and you may have to wait until next week or maybe even the week after that. I don't know. The bottom line is we've got our scenarios. Let's wait for the market to do its thing. When it becomes clearer, then we work with it. Okay, guys, thank you for watching. I shall see you in a few days for the update. If things change, let's see how they play out. Maybe the market will be slow, maybe not. Who knows? It is the beginning of the year. So take it easy, manage your risk, and expect the market to be slower. Bye for now, guys, and have a good trading week if you are here or your charts and active. All right, bye for now.